Andy Myers at Weiss Research, and this is your morning market alert for Wednesday, June 1st. Jen Amos is off this week. Stocks on Wall Street may kick off the month of June with modest losses following 4 straight days of gains. Investors are digesting a couple reports on the U.S. labor market. Automatic data processing said that private employers added just 38,000 jobs last month. And earlier, outplacement firm Challenger Gray & Christmas announced that there were more than 37,000 layoffs in May, up a bit from the previous month. I'll have more details on those reports after the opening bell. The data come ahead of Friday's closely watched government employment report. It's forecast to show an increase of nearly 200,000 non-farm jobs, following a much bigger than expected jump of 244,000 in April. And the unemployment rate may move back down a bit to 8.9%. Later this morning, we'll get the latest on the manufacturing sector from the Institute for Supply Management, as well as a reading of April construction spending. Economic news is also in the spotlight overseas. China's manufacturing activity expanded at its weakest pace in 3 quarters last month, according to 2 separate surveys. The slowing growth was due to high inflation and the government's efforts to rein in prices. Meanwhile, manufacturing in the Eurozone and the UK seems to be facing even stronger headwinds. The Purchasing Managers' Index in Europe fell to a 7-month low in May, while the UK's reading was the weakest in 20 months. Those reports are helping to send stocks across the continent broadly lower. One of the biggest stock losers in Europe and the US for the second straight day is Nokia. It fell nearly 15% yesterday after warning of weaker results in the current quarter. Today, the mobile phone giant is down another 10% in the pre-market and about 8% in Helsinki. That follows downgrades and stock price target cuts from several analysts, including Goldman Sachs and Bernstein. Another stock to watch today is Yahoo. According to published reports, it reached an agreement with its Chinese partner Alibaba over ownership of its online payment system Alipay. Last month, we learned that Alibaba transferred the business to a separate entity controlled by its chief executive without Yahoo's knowledge. That helped push Yahoo shares 6% lower in the past month because its stake in Alibaba is a big draw for investors. A final agreement regarding Alipay still requires the consent of another shareholder, Japan's SoftBank. We're also keeping an eye on a couple retail stocks this morning. After yesterday's closing bell, Phillips Van Heusen said it swung to a profit in the first quarter, powered by growth in its Calvin Klein and Tommy Hilfiger brands. The company also raised its sales and earnings targets for the full year, sending the stock up 3% in the pre-market. Dollar General may also open higher. It posted a 15% increase in first quarter profit and stuck to its full year forecasts. And finally, Macy's lifted its estimate for same-store sales in the current quarter and the full year, sending that stock up nearly 3% in the pre-market. That's the latest from Weiss Research. I'll be back after the opening bell with all the market-moving stories, including deals in the energy, materials, and information technology sectors.